Simplicity is the prerequisite for reliability. Edsger Dijkstra, maybe I pronounced that name right, but Edsger is 100% tuned into what we talk about on a daily basis. Occam's razor in less words. Simplicity is the prerequisite to reliability. And my friends, what is more reliable than our weekly vertical crossover? It shows when the big trend, the weekly trend, crosses over from fear to greed, or from, we can go back in time, greed to fear, as we saw when the corona breakdown occurred in the marketplace. And my friends, we have seen a little bit of a scare this week on Thursday. Let's wrap up this week and show you what we've seen and what we may see in the shortened holiday week here in the U.S. For those of you, and I know we have a lot of friends overseas, this is a holiday in the U.S. Things are shut down on Monday, so the market will be back on Tuesday. But as we look at our screen here, for those of you listening to our popular podcast, thank you for being with us. I'll tell you what we are seeing. We continue to see a nice, strong up market as far as the Heikin-Ashi candlesticks go. But look at what we've seen happen over the course of this week. We had things trending up. Price percent oscillator has gone flat with just 2 days of down movement. Very, very strong down movement on Thursday, followed by some more down movement on Friday. Not so much on the S&P, 0.88%. But again, we've seen that ever important price percent oscillator go flat. Derivative oscillator also lose momentum. It had been gaining it. Gosh. It has been going up since all the way back at the end of July, the derivative oscillator, has the price percent oscillator, but it's gone flat on us now. Now we look at the week, we can see by the candle itself is a little higher than it was in the prior week. It is a smaller candle though. We can see the wick on top is larger, but that shows us the pullback. Now we go from the weekly to the 2-day and we see lots of weakness there. This is a completed 2-day candle. Now it represents Thursday and Friday. We can see a long wick on the bottom. Lots of downward pressure pushing all the way through, but not staying pushed through the weekly trend line. That is one hell of a knockdown. Also, we can see that we have penetrated the 2-day trend line, and we had a stair step going up quite nicely. But again, we have a red spinning top, long wick on the bottom showing all that downward pressure, and a wick on top also. Look at that price percent oscillator. Hasn't crossed over, but it is darn sure going down. Derivative oscillator lost lots of energy. And of course, 2 days of strong down movement. The stronger down movement on Friday was in the morning, not so much in the afternoon. But we see that price percent oscillator and derivative oscillator pegging down, pushing through the 2-day trend line. And again in the morning, pushing through the weekly trend line as far as the wick itself went, not the candle itself. That is very important. But we can really see the hammer down in that movement. What are we continuing to look for? If you are still in and hoping to see something come back, then of course if you have a penetration of the price percent oscillator on that 2-day chart over the red signal line, you are definitely out. If you took your profits on the initial drop yesterday morning, no problem. You're okay there. That's not a problem at all. We are going to redraw our 4-hour trend line and make sure that it is tracking with that down movement. So that's where we are as we go into the new week. Again, pay very close attention to that 2-day chart. If you see things bounce off of that and the half-day chart cross back over going up, that is the weakest reason to jump in. But that is a possibility on the half-day chart. We'll just continue to watch, see what there is to see there. If you see things cross over, most definitely your trade is over at that point on that 2-day chart, crossing over, going down. So let's move from the weekly or back to the weekly, and from the S&P to the Nasdaq 100. Now, look how the week ended up on the Nasdaq 100. It ended up with a red open box. It had been green starting the week off, but look what has happened. We see prices pierced on the wick, the weekly trend line. We now have a slowdown in the up movement is what that open box red candle means. Price percent oscillator flat, derivative oscillator losing momentum. Go to the 2-day chart, getting close to crossing over, going down. We have a red spinning top here, piercing quite significantly the 2-day trend line. We see the wick piercing the weekly again, warning signs there, derivative oscillator losing momentum. Half-day chart, 195-minute chart. We can also call it pushing through in the morning, down strong, slowing down in that down movement in the afternoon. And we're going to also redraw our trend line. There we go. And we'll just continue again to watch and see what happens. We do have a definite slowdown. Now, we had that happen on the Qs, not to the extent that we see it here, but we had it happen back at the end of July, and then the next week things moved up. So again, just watch, pay attention, see what there is to see, what there is to learn. By the way, great training for you today. For those of you who are subscribers, if you're not, go to chartingwealth.com, sign up. Otherwise, you don't get these special trainings. Really want you to watch this over the holiday. Master the market with our weekly market worksheet. There is a link to a video there. It shows you how to fill out the worksheet. You say, where can I get those worksheets, Tom? The daily market, weekly market that you're talking about right now, and the trade worksheet, they're in your show notes every day. PDFs are right there for you to print out. We also have a bound 3-month version that we will sell you. But in the meantime, why not print them out and fill them out yourself? The best way to truly, I was talking to an advanced accelerated market mastery student today who started filling out those trade worksheets and at least does the weekly every week, the trade worksheets when they do trades, and they try to do the dailies. But they said the mastery it has given them, the understanding. I say this all the time, my friends, if you just try it. Try those worksheets. They are amazing. They require some energy on your part while you're listening to the program every day, but you can fill them out while you're listening. You won't believe what it gives you skill-wise on the daily and the weekly, and then every time you do a practice trade, do the trade worksheet. Now, let's keep moving on. Go to 20-year bonds on the weekly chart. 20-year bonds, the only thing up for the day. We see that gold's the only thing that's up for the day. 20-year bonds are down the most for the day, 1.90%. So we see on our weekly chart things just trudging down. Now we're not hitting a lower low this week, but we do have a red down candle. The candle body itself is lower than the prior week. Price percent oscillator moving down. It's lost a little bit of that downward momentum on, looks like it, on the price percent oscillator, but that derivative oscillator moving down strongly. We look at the 2-day chart, which was trying to head up. We see this latest one as far as the price percent oscillator kicking back over, going down, derivative oscillator losing downward momentum. We can see and again, we had a stronger up movement there that was trying to form, but it didn't happen on this latest candle. It is a green open box candle with a long wick on the top, but shows that it was knocked down quite significantly, still pushed through the weekly trend line and through the 2-day. But again, what's most important, price percent oscillator is heading down. So we'll continue to watch, see what there is to see there. If you went ahead, took your profits on that trade and pulled out, because remember, that was our 2-day recross going down. Some of you jumped out after those 4 days of strong down movement, the two-day candles. Others of you waited until we had the next 2-day strong down movement. 2-day, 2-candle, 4-day strong down movement. And then we've had this bump up again. Now, what's going to happen over time? Don't know. With all of that knockdown on the Thursday, Friday candle, you could see things again reverting back to the mean all things being equal, the market does tend to move in the direction of the largest chart, which is the weekly. Let's look at that half-day chart. We saw it move up strongly for 1, 2.5 days. And then, of course, we saw it down in the morning, further down in the afternoon. Are we going to have a crossover going down on that 4-hour chart? Might happen. Might give you a reason to continue to hold out potentially for some more down movement. But again, getting a little scary with the way things had popped up. So this is all about learning. Hope you're filling out your trade worksheets and learning from these experiences. They are very, very important. Priceless. And they don't cost you anything to practice trade. Now, let's look at gold. What is up with gold? Gold, of course, reached its peak of $194.45 back that first full week in August. Of course, it ended on the 7th of August. Then sideways and trying to slide down since then. Ended the week with a green doji. Price percent oscillator heading down. Derivative oscillator losing downward momentum. Go to the 2-day chart. We can see that it bumped up a little bit on Friday, but look at that 2-day candle. Still red, solid red down candle. Price percent oscillator still going down. Derivative oscillator negative, losing some downward momentum. What do we see on the half-day chart? We see 2.5 days of strong down movement. Down in the morning, a little bit of a recovery. In the afternoon, price percent oscillator still negative. Derivative oscillator still gaining downward momentum. So again, we'll continue to keep our eye on gold and see how it's going to sort itself out. 2-day is down, weekly is up. What's going to happen? Is the weekly going to cross over going down this next week for a weekly vertical crossover? Maybe. What about the 2-day? Is the 2-day maybe going to get some oomph and push up? Friday at 0.28% up is not going to do it for you, but what if Monday, Tuesday, Wednesday, you have some strong up movement? Could you get a 2-day recross going up? Anything's possible. We'll watch, wait, and see. That's where we are, folks, as we end the day on Friday. Remember, markets are closed on Monday, so we will be back to you on Tuesday. And just can't wait to keep pumping this stuff out for you. If you haven't purchased our book, second edition of Charting Your Way to Wealth, we want you to have an autographed copy standing by for you. Follow the link in the show notes. Please subscribe to our YouTube channel. And if you want to get all those special daily trainings we do for our students, they are free. Go to chartingwealth.com, sign up. You'll get them. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.